Well, the housing industry is just in turmoil. Interest rates have almost doubled in 5 or 6 months. Prices of homes still keep going up. So a double whammy for the first time home buyer is just really, really tough. They still have the question, are you going to buy or are you going to rent? Because you still need a place to live. Charles Nenner sent us his research and it gives us a little bit of forewarning. We can do our forecast. We know when to buy, when not to buy. At the moment, we're not putting any extra money out. So we're using 1031 money. We're using money that's already at risk in the marketplace. So we're not adding any new money, but that's not an investment. Sometimes a first-time home buyer or a home buyer in general, we're not using new money or old money. You need a place to live. So it's not like we're investing. So let's change our mindset and let's just talk as if you're purchasing a property because our research works for both of you. In this slide from Dr. Nenner, you can see that Lennar, which is kind of a proxy for the building industry, it's also a bit of a proxy for the real estate industry. Now, in this chart that you look at, you can see if you look over to the left, it says 9/1/23 before we bottom in the building industry. So that's better than well over a year, almost a year and a half before it just reaches bottom. So that's telling us it's a really, really bad time for builders coming. A really, really bad time. And you can certainly understand that. I mean, Charles Nenner does not talk about the why. He always talks about the what because he doesn't know why these things are going to happen. He just knows what's going to happen. He looks at his charts. He can see his charts and tell you what the charts are telling him are going to happen. And his charts are telling him and have been telling him for a number of months now that the new home builders were in trouble. And of course, the home builders here in Phoenix are certainly concerned. Now, they typically think they're going to build a house for you in 4 or 5 months. They're going to build you 15, 16, 1,800 square foot. They're going to get it done in 5, 6 months. They plan on that. Now they're finding it at 5 or 6 months is going to 12 to 15 months. And of course, they have interest carry on these properties. So would you be concerned if all of a sudden your interest, not only did it double, it now says twice as long. So they might actually be paying 2 to 3 to 4 times more interest carry than what they'd planned for it. But they've also got materials going up, lumber's going up, windows are going up, glass is almost impossible to find, air conditioners, and labor has all gone up. As a builder, they're starting to get very, very cautious. They're not opening up new subdivisions. They're limiting how many properties can be sold in any particular subdivision because they don't want to sell you a house for $400,000 and find out 12, 15 months later when they deliver it that it costs them $450,000. And they're going to lose 50 grand every house that they sell. This is not good for business. So you can understand where builders would start to get reticent. And of course, this isn't good for business. If you're in a building business, you build. And now they're saying they don't want to build. So this is really, really bad for their business. What does that mean for the average investor? What does that mean for the average buyer, really? We just got this today from Zero Hedge. This just illustrates. Now, we have had for the last 4 quarters or 4 months, we've actually had new home sales. The sales themselves have dropped. And in April, they dropped 16.6%. So this is really, really bad for the builders. And if we go back into our research in using Lennar actually peaked just before the great financial crisis, before the bubble popped, Lennar peaked. So here we are, their stock limit in August of 2005. Now, the real estate bubble didn't really peak until 2006, so almost 9 months to 12 months in advance. And of course, the bubble didn't pop for another year, but the momentum was all gone. So through that 2005 into 2006, people were buying and selling. There's just lots of it going on, and then it stopped. There's a little bit of a drabs and it just went up a little higher from there, but it was basically done. It was very hard to liquidate any properties at that point. But let's talk about what the implications are. Here's the implications, is that we have 4 to 5 million homes shortage in the United States. And they're severely short in Florida, Texas, and Arizona, where everybody is moving to. Here in Phoenix, Arizona, we've got 150 to 200,000 people every year moving here. This has been a decades-long trend, and it's accelerated. So we need houses. Here in Phoenix, Arizona, we're 120,000 units short right now. And the builders are slowing down. They don't want to build anymore. Now, I don't mean to be political, but we have people coming across the border, and they're coming in about 1 million people. Those people all need places to live too. So they're adding to the shortage. So instead of building our way out of this, we're actually slowing down, making houses going to be kind of a unique thing. If you own a home, it's going to be a pretty nice thing for you to do. You're going to own a home of your own. It's going to be really, really cool because they're going to be scarce. So because we see decline in home building, that's going to put lots and lots of pressure on rentals, and we don't see any abatement in rental increases. So we think that rents are going to continue to go up. Now, I'm probably not going to go up at what they've been doing. We've enjoyed 20 to 30% increases. Those are unsustainable. That's not going to happen. But could you get 5 to 8%? Of course. And could this go on for 10 years? Yes, of course. It's just a wonderful time to be owning real estate rentals. So this is good for us. But what about someone who's starting out that needs a place to live? Because you are going to need a place to live. Particularly if you have children, you're going to need a place to live. So you only have two choices. You're either going to rent or you're going to buy. Here's a couple of quick questions that you need to ask yourself. What's your time horizon? If you're only going to go to Florida, Texas, or Arizona, or wherever you're going for a couple of years, no sense buying a house. This would not be the time. I don't think you're going to have the wind at your back and see these prices go up significantly enough to pay all the costs and all the problems and all the obligations that you'd be putting yourself through. So I would say if you're only there a couple of years, go rent something and just be happy with that and move on to your next one. However, if you're looking at 5 years, which is very, very, very common, well, then I think that maybe owning a home of your own is probably a pretty good thing. Also, what's your employment outlook? If you're working in a company that may be at risk, they've had some bad earnings, maybe their business is slowing down, you may want to think, is my job secure? So if your job's not secure, not a time for you to be buying a house. We never want to jeopardize the asset. We don't want to jeopardize your credit. We don't want to put you under stress. But if you're working for like the federal government or medical or legal, or you're maybe a dentist or a doctor or a surgeon, you have no reason to be concerned about your employment outlook, that you feel very, very secure in the industry, well, then you might consider buying a house. And when you're doing this, you need to make sure that the affordability is something within your means. This is the time to be just a little bit more on the conservative time. Buy something that's very, very affordable and enjoy that. So make sure that it's affordable for you. And if you've got all three of those, then by all means, I think that you're probably really, really strong candidate for buying a property, because properties, single family homes, are going to become a scarce commodity. Remember what I said, single family, not condos. These are become very, very scarce. Single family home, going to be probably one of the best investments you can possibly make. Not only is it an investment, but just think of for your family, the stability it gives your family. You are giving them such a great, great advantage. Rents are probably going to continue going up. Not in these great big 20 and 30%, but 5 to 8, probably 5 to 8 each and every year. So after 4 or 5 years, that's going to be a significant increase in rents. And if you buy a place of your own, you're going to get a fixed rate mortgage. And sure, the taxes and insurance and HOA may vary a little bit, and you can budget for it. Now, if you've been following my videos, I've been talking about people my age should have 2 properties in their portfolio when they retire, and that's to protect your purchasing power. That's because a single family home is one of the greatest inflation hedges you can possibly buy. And we're on Main Street. We buy single family homes and they track inflation. And the financial benefits of owning a single family home are just unbelievable. So the National Association of Realtors does all kinds of research, has all kinds of data, and they have repeatedly, over and over repeated the fact that if you're retiring and you've been a homeowner all your life, you have 10 to 20 times more net worth than someone who's rented a property all their lives and never owned. 10 to 20 times more, not percent, 10 to 20 times more than someone who's rented. You get tax advantage, you get principal reduction, and these eventually are going to go to free and clear. Plus, they appreciate. So owning a home of your own is really a pretty good deal. So if you have a family and you need a house, if you follow those rules, you're always welcome to call us. You reach me at michael@michaeldouville.com. We're here for you. If you get any kind of value out of our videos, we'd love you to subscribe. It really, really helps our marketing. And you're always welcome to put comments down below. And you could reach us. My very, very best to you.